There is an entire tab, tab I in Publication 4012, that is discussing the Earned Income Credit. It is one of the bigger and more common credits for our clients. Therefore, we will discuss this refundable credit in some detail. First, we will describe the Earned Income Credit, or EIC, and then we will talk about how to qualify for the EIC, including the rules for taxpayers with and without children. Finally, we'll talk about calculating the Earned Income Tax Credit, even though TaxSlayer will calculate the credit amount automatically. The EIC is a refundable tax credit for most people who work but do not earn high incomes. The purpose of EIC is to reduce the tax burden and to supplement the wages of working families whose earnings are less than the maximums for their filing status. Eligible taxpayers can receive a refund with this credit even if they have no filing requirement, owe no tax, and had no income tax withheld. EIC is reported on its own line on Form 1040. The chart shown on the slide shows how the EIC rises and falls with income and number of dependents. Families with 3 or more children may claim EIC, and the amounts are adjusted for inflation every year. All taxpayers and dependents must have a valid Social Security number by the due date of the return, including extensions, to claim the credit. The tax software automatically calculates the credit. You will need to understand this credit in order to answer taxpayers' questions. Returns claiming EIC generally cannot be released before February 15th. There are general sets of rules for claiming EIC, as well as general eligibility rules that apply to all. After those initial requirements are met, there are rules for those with and without qualifying children. Note that these must be qualifying children. Qualifying relatives or other dependents aren't qualifying for EIC. Finally, the taxpayer must have earned income to qualify, but there is an upper limit on AGI which is impacted by the number of qualifying children. We'll break down these rules in the next few slides. Let's begin with the rules for everyone shown in Part A on the slide. Taxpayers and qualifying children must all have a valid SSN or Social Security number. If taxpayer, or spouse if filing a joint return, or their dependent has an individual taxpayer identification number, or ITIN, they cannot get the EIC. If the taxpayer's Social Security card says valid for work only with INS or DHS authorization, the taxpayer can use the Social Security number to claim EIC if they otherwise qualify. If the taxpayer's Social Security card has a not valid for employment imprint, and if the cardholder obtained the SSN to get a federally funded benefit such as Medicaid, they cannot get the EIC. For this test, you must see the Social Security card. The Social Security benefit statement cannot be used to claim EIC. This is usually not an issue because most EIC claimants will not also be drawing Social Security benefits. Singles and couples who have Social Security numbers can claim the credit even if their children don't have SSNs. In this instance, they would get the smaller credit available to childless workers. In the past, these filers didn't qualify for the credit. Taxpayers cannot file an amended return to claim the benefits for prior years where they did not have a valid Social Security number. So, a taxpayer who got his or her SSN this year cannot go back and claim EIC for prior years. Married filing separately can only qualify if they can pass the Considered Unmarried test. This test determines if they have a qualifying child living with them for more than half the year, and either lived apart from their spouse for the last 6 months of the year, or are legally separated according to state law under a legal separation agreement or a decree of separate maintenance, and did not live in the same household as the spouse at the end of the year. The claimant must be a U.S. citizen or resident alien all year. We cannot file Form 2555 relating to foreign earned income. Form 2555 is only in scope for those who pass the International Certification Test, which our site in Sonora does not take. Investment income must be $11,000 or less. This taxpayer cannot be a qualifying child of another person. In addition, they cannot have received a letter from the IRS that disallows the credit. If the IRS determined that a taxpayer claimed the credits due to reckless or intentional disregard to the rules, not due to math or clerical errors, the taxpayer cannot claim the credits for 2 tax years. If the error was due to fraud, then the taxpayer can't claim the credits for 10 tax years. Check out the question on Part 5 of the intake interview sheet that asks if the taxpayer had EIC disallowed in a prior year. If the taxpayer has a qualifying child, that child must meet the relationship, age, and residency tests to qualify as a child for EIC computation. The child cannot file a joint return for the year unless it's only to claim a refund of income tax withheld or estimated tax paid. The child does not have to pass support tests, i.e., the taxpayer does not have to provide more than 50% of the child's support, and the child can earn more than $4,700. This means that the child does not have to be a dependent, but is a qualifying child for EIC. Also, another taxpayer can't claim the child for purposes of EIC. The taxpayer cannot be the qualifying child of another person. Here are the questions to ask the taxpayer to determine whether the child is a qualifying child for purposes of the Earned Income Credit. These questions are on the 4012, page I-6. If you have a client who could potentially qualify for the EIC and has a child, go to the book and ask these questions. Most of the information will be on the interview and intake sheet. If the child qualifies, annotate the intake and interview form with EIC next to the child's name in the Dependents section to record your results. This will help your QR person. If there are no qualifying children, the taxpayer must be at least 25, but under age 65 as of December 31st. There is a 1-day grace period for New Year's Day babies. Taxpayers turning 25 on January 1st are considered to be 25 as of December 31st. Taxpayers reaching the age of 65 on January 1st are still considered to be 64 as of December 31st. The taxpayer cannot be a dependent of another person. The taxpayer must have lived in the United States for more than half the year. The taxpayer cannot be the qualifying child of another person. For most of our taxpayers, only the age limits for those without a qualifying child will be of concern. Finally, you must have earned income in order to qualify for the EIC. As you'll recall, earned income is income derived from wages, salaries, tips, other taxable employee pay, and self-employment. Taxable long-term disability benefits received prior to the minimum retirement age is also considered earned income. The 1099-R will have the distribution code number 3. Be sure to check the TaxSlayer box to report disability earnings on Form 1040 line 1H. However, you cannot have too much income. The table shown on the slide shows the AGI maximums for the year 2023 for the various filing statuses and number of qualifying children. This page is I-5 in Publication 4012. It provides a series of questions to ask the taxpayer to see if they qualify for the EIC. However, the first question asks about earned income, and you're not going to know that until you have entered all earned income. In practice, you won't need these questions because TaxSlayer makes all the qualifying decisions based on the information entered in the basic information and income sections of the tax return. The only possible exception may be question number 3, where you may have to determine if the considered unmarried situation applies for married filing separately. Review Form 13614-C, Intake Interview and Quality Review Sheet under Part 5, Life Events, question number 4. Last year, did you or your spouse have EIC, Child Tax Credit, or American Opportunity Credit disallowed in a prior year? If yes, for which tax year? If this question is answered yes, then Form 8862, Information to Claim Certain Refundable Credits After Disallowance, must be completed. If this form is not completed, the tax return will be rejected by the IRS. Hopefully, the taxpayer will bring in the letter and you can see if EIC is disallowed for this year. If so, on the TaxSlayer Form 8862 entry screen, select Not Eligible for EIC and answer the two questions on the next screen to keep TaxSlayer from calculating the EIC. If EIC has previously been disallowed, Form 8862 is needed to start it up again. On Form 8862 entry screen, select Form 8862 entry screen and then select Not Eligible for EIC and answer the questions to claim the EIC after disallowance. C4012, page I-8, Disallowance of Certain Credits for the steps for completing Form 8862 in TaxSlayer. TaxSlayer will calculate the amount of EIC and complete Schedule EIC with the qualifying child information if necessary. Let's avoid some common EIC filing errors such as incorrectly reporting income, particularly income and expenses from self-employment, incorrect Social Security numbers, married taxpayers incorrectly filing as a single or head of household, claiming a child who does not meet the residency and relationship requirements, not claiming a qualifying child because the child is not a dependent, example, a full-time student under 24 who supported themselves. Support is not a test for EIC. California awards an earned income tax credit in addition to any federal credit. To qualify, the taxpayer must have California earned income with an AGI less than $30,950. California earned income is any income subject to California withholding or self-employment income being reported on the California return, regardless of where it was earned. The taxpayer must be at least 18 or any age if they have a qualifying child. Unlike the federal EIC age limit of 65, there is no maximum age for Cal EITC. In addition to Social Security numbers, California will accept ITINs for the taxpayer, spouse, and any qualifying children. The taxpayer must live in California for at least half of the tax year. All the other federal rules regarding dependency status apply, except if the taxpayer has a qualifying child, they can still receive Cal EITC even if they are claimed as a dependent on another taxpayer's return. We get a lot of seniors who pick up a small part-time job and are rewarded with an earned income tax credit. However, they cannot have investment income greater than $4,525. Hopefully, TaxSlayer will determine eligibility, calculate the credit, and complete the necessary forms. No manual entries are required. California ties the California Young Child Tax Credit, or YCTC, and the California Foster Youth Tax Credit, FYTC, on the next slide, to Cal EITC. If the taxpayer qualifies for Cal EITC and they have at least one qualifying child under the age of 6 as of December 31st of the tax year, they can qualify for a $1,117 refundable credit. A Social Security number is not required, but if the child has neither an SSN or an ITIN, then, as with the dependent exemption credit, FTB Form 3568 is required. Alternative identifying information must be provided to prove the existence of the child, and the California return must be paper filed. Credit starts to phase out as earned income exceeds the threshold amount of $25,775 and completely phases out at $30,932. Similar to the Young Child Tax Credit, California offers a refundable $1,117 foster youth tax credit for taxpayers between the ages of 18 to 25 who are in foster care at age 13 or older. To qualify, the taxpayer must also qualify for Cal EITC. These taxpayers will be registered in the California foster care system and must be verified through that system. There are two ways to satisfy the foster care verification requirement. Upload PDF versions of foster verification papers, or check the box allowing the FTB to verify foster status via the California Foster Registration System. This credit is for former foster children who are filing their own taxes, not for taxpayers who are claiming a foster child as a dependent. In summary, taxpayers can qualify for the refundable earned income credit based on their filing status, number of qualifying children, earned income, and adjusted gross income. Taxpayers with no qualifying children may also qualify for EITC. For the federal benefit, the taxpayer must be between 18 and 65. There is not upper limit for Cal EITC. TaxSlayer will determine qualification status and calculate the amount of credit if you enter the dependency and income information correctly. The interview tips in publication 4012 can be used to clarify or confirm your entries so errors can be avoided. Remember, a taxpayer can be disallowed from claiming EITC if unintentional errors were made. When finishing the return, TaxSlayer will summarize the qualifications it used to calculate EIC or tell you the reason why there is no EIC. This serves as a double check so you can go back and correct anything you missed.